So good afternoon. So I've shared the illustration that is in the portal on an Excel sheet for easier working. And whenever you see this kind of question, I've shared the format. It's easy. You just need to understand a few concepts here and there for you to be able to maneuver. Most importantly, I always advise students that the question is best commenced by setting out a trial balance, even if it was not part of the solution required, because the trial balance will be, we know what is a trial balance. A trial balance is basically an arithmetic check. So you'll be in a position to tell whether there were any errors of original entry from the word go, even before you start taking the pain of trying to balance or to prepare the asked accounts. Like in this question, you've been given the question that you've been asked is to prepare the revenue account and the balance sheet. So I want first to adjust this to be a trial balance, because it will be easier. So trial balance. So we have the format, and in the format I had indicated items that are supposed to be credited and items that are supposed to be debited. I should originate another column here, another row, and have the items that will be debited and credited. This is just a trial balance. We are just doing an arithmetic check before you do the adjustments. So we have the life assurance fund, supposed to be credited. You can take it on this side. So I'm just aligning them where they are supposed to be. I have claims by death, claims by maturity, they are debits because these are expenses. Then I have premiums. Premiums are credit because these are incomes. Then I have expenses on management. We take them to this column. Expenses are supposed to be debited. Then I have commissions. I think they are okay. Then I have consideration for annuities granted. If you recall, the consideration for annuities granted is any lump sum payment that will be received by the insurer in lieu of the granting annuity. And therefore, this is an income supposed to be credited. Then I have interest, dividend, and rent, less the withholding tax, their incomes. Then I have income tax. Income tax is an expense, so we debit. We go on, I have surrenders. What are surrenders? What are surrenders? Don't allow me to, the expenditure, what are they? Explain to us what they are. What's the definition of surrenders? What are surrenders? They are expenditures, yes, I agree. But what are they? When do we get the surrenders? This is when people are unable to continue paying their premiums, isn't it? And they say enough is enough. Let it get there. So they don't complete their policies. Then you have annuities. What are annuities? You know, you must understand what they are for you to treat them accordingly. What are annuities? When one pays a lump sum in the insurance company, the insurance company reciprocate by paying this person a certain amount of money at a regular period of time. And these are the annuities. So annuities are expenses. Then I have bonus paid in cash. It will be an expense to the insurance company. Then I have bonus utilized in reduction of premium. Also an expense. Then I have preliminary expenses. These are current assets in the balance sheet. So we are going to debit. Then I have claims admitted but unpaid at year end. Claims admitted but unpaid at year end. Yeah, there is the right column, but you're going to adjust them in the revenue account. Then I have annuities payable. Annuities payable. They are payable, so you are supposed to put them on the other side. They'll be current liabilities in the balance sheet because they are account payables. Then I have paid up share capital. Capital items are always credited from the conventions of financial accounting 1. Then I have government securities. These are assets. So assets are supposed to be debited. Then I have sundry assets. Then I have fines for revising lapsed policies. Again, these are supposed to be credited. So there we are. I can now delete these two. Retain my. Can now total and see whether our trial balance will tally. So this is equal to sum. Allow me to use the formula. So I'm adding all this. Enter. Is equals to sum. And to add everything in this column. Enter. So you can see our balances are tallying, which means that the trial balance, we have done the arithmetic check. So that's the importance of doing the arithmetic check, because it helps you establish whether whatever you're about to engage in is right or not right. If we had error of original entry, it will be very hard for us to establish them. Because from the additional information that you've been given, if you look at your additional information, are you there? Are you at the additional information? Being told claims covered under reinsurance is 10,000. Further claims intimated are 80,000. So those are claims by death. We have a further bonus utilized in reduction of premium of 1.5. So that will affect our premium. So you can see we have the premium of 2.5. So we are going to add the 1.5, the bonus utilized in reduction of the premium. You're going to get 4,000, right? Then I have accrued interest of 15.4, and the outstanding premiums are 7.4. So no big deal. We can adjust those accounts as we go on. So let's go to the first account, which is the revenue account. Revenue account. Kindly mute yourself unless you are talking. Mute yourself. Who is this who is not muting the yourself? Nemoipo. I'll go on. I want to do the revenue account. What you need to know is that when you are preparing the revenue account, we always start with the life assurance fund because this is the balance that will be brought forward. And this balance will be brought forward as, if you recall, I explained why life assurance company does not report a profit. Now, the assumption is actually the life assurance falls under the categories of not-for-profit making organization. Life assurance, charity organizations, hospitals, etc. If you look at the nature of the organizations that we are calling not-for-profit, they are dealing with human life. Ideally, there is nothing that you can compare with human life. Even schools, where you are getting knowledge, we are trust. Trust are not supposed to make profit. So you are here to change lives. So we start with the life assurance fund. But this time now, I'll add a brought forward so that we know that this is the balance as at the beginning. The amount is not changing. It's still 1470. Then from there, we can now do our adjustments of the premiums. So I have the premiums here. My figure for premium is 210,572. Then I'll add the outstanding premiums. What's the figure?
7,400.
7,400. Convert this into money. So 7,200. Then we are adding the bonus utilized in the reduction of premiums, right? So I'll add bonus utilized in reduction of premium. Let me just use PR. What's the amount in the additional information?
1,500.
1,500. What else? I think that's the adjustments that we are supposed to make, right? What I need people to appreciate is that the premium received during the accounting period, we add the outstanding at the beginning of the period. Then we add any bonus in the reduction of the premium. And we are going to subtract any outstanding premium at the end of the beginning of the period. But for this one, not at the end, at the beginning of the period. But if you look at our trial balance, there is nowhere that we have an outstanding period, except for the adjustment that we are making. And then from this figure, you are supposed also to less the reinsurance premium, but we don't have a reinsurance premium. So I think that's all that we have. So adding the 3, you get 219,472. 219,472. So we go on. From there, what do we add? We are in the format. You have the consideration for annuities, granted. The figure is 10. Having a lot of. The figure is 10, 620. Then from there we have the interest. I'm picking them as they come. It's good always to first check the adjustments before you come here. So interest, dividend, and rent, they are 52, 461. Then from this, I need to deduct the tax, not the tax, I had the outstanding, right? I had the accrued interest. What is the figure for the accrued interest? Is in the additional information. The figure was 15,400.
15,400.
15,400. Yes. Anything else? Don't see. So we add these two. This 67,861, 67,861. Then from there, I had the fines. So these are fines. Here 92. Now that item that you are supposed to have credited, share capital will go to the balance sheet, annuities payable, balance sheet, claims admitted but unpaid, balance sheet. I think we have everything. So I can add them together. Equals to sum. So this should be our figure. So we go on. So I did now the debit side. On the debit side, we start by claims. So I have the claims. Claims by death. I can pick them the way they are. We adjust now the claims. There are further claims that were intimated, isn't it? What was the figure? Intimated? $8,000. Correct. 8,000. Do we have any? We had also a coverage under the reinsurance, so we are going to less. Coverage. All covered. And reinsurance. What was the figure?
10,000.
10,000. This now we put in bracket because we are subtracting. Then we add now what had matured. Add maturity. This 56 by maturity. Maturity. Year 56 or 20. They're getting 131,400. 131,400. We go on. Then from there now we add the others. I have surrenders, annuities. I can even pick them the way they are. Surrenders, annuities, bonus in cash. Control copy. Even the other one. And the way it is appearing, I have to pick it in parts. So of premium. And this is 2.5. But remember there was you need to adjust this figure, the bonus utilized. He had an additional information. We had a 1.5. Can see it? So this should be 2.5 plus 1.5. So you're going to get 4,000. You can see it in the additional information, the bonus utilized in reduction of premium. Preliminary expenses, these are current assets, claims admitted, but at the end. We have commissions before you forget. I'm trying to look through the list to see what is supposed to be the revenue account item. Those are the commissions, even the expenses, management, so expenses, supposed to be debited. Then I have the income tax. Anything else? Government securities assets, and these are assets. So I think we have taken everything, right? Can even transfer all this to this end. So whatever I'm going to get here will now be the life assurance fund carried forward. The balance in figure will be carried forward that will be taken now to the balance sheet. So I need to get the totals here. The totals here are 245. Write this figure somewhere. 245, 621. 245, 621. Have you written it? 245, 621. Then you subtract and give me the balancing figure. So you subtract it from 170, 176. No, 1,768,607. What do you get? Dixon Murarwa. Recording the class. I'll share the recording.
Yes, sir.
I'm saying I'm recording the class, so I'll share the recording.
Okay.
But you are not giving me the answer. You people are just keeping quiet. I've asked
1 million.
1 million.
1 million. 1 million.
522.
522.
986.
986.
Yes.
So this is a figure that is very key because this is a figure that will be taken to our balance sheet, right? Should we do a mistake, we'll come back. But with the trial balance, everything seems smooth. That's why you're supposed to start with the trial balance. So can we go now to the balance sheet, all people balance sheet? I'm going to squeeze this work to appear on the same page. We go to the balance sheet. And when you are preparing these books, the foundations of accounting remains, right? So your topic is supposed to have 3 lines. So this balance sheet, which is old school. We no longer use this word. We use statement of financial position. So as at, and for this particular question, we didn't have revenue is for the year ending. For the year ending. Then blah, 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 you put the date. Also the trial balance is for the year ending, you put there. So the foundations of financial accounting stays. So there is nothing that we are violating. They are still there. These are books of accounts. So you are supposed to start by the name of the company. This was All People Assurance Company, then followed by the book. Are we together? Then followed by the period. I had ignored that, but it's good to emphasize. I always give students half a mark for doing that. So if you have several half marks, they are going to boost your marks, isn't it? So here we are preparing now the, so I'll pick what is in the balance. So I have government securities and I have the sundry assets. But sundry assets are supposed to appear below because we always arrange our assets in order of permanency. We always start with the most permanent and then go to the least permanent. Give me the other items. We have the outstanding premium. This will be an asset. So accruals, outstanding premiums. Which other asset can you spot? Just know that accrued expenses are current assets, accrued income are current liabilities. Do we need to add? Think. You also have the format. I have the covered under insurance. It's 10,000. Remember, is an asset to the farm. So this was 7,400. This one is 10,000. Can convert these rows to money. I'm actually supposed to put them on this side. You had the claims covered under insurance. It will be an asset to the reinsurance company. I have the accrued interest here of 15,400. It's also an asset. $15,400. I have these preliminary expenses. We paid expenses assets. So the business here is to try to know which is an asset, which is not. Then I have the, cannot see any other assets. I have the sundry assets. Cannot see any other assets. So I can add this and leave a space. Maybe we'll get an asset somewhere to avoid back and forth. So we add all this. So that should be our balancing figure. So these were assets. So we need capital and liability items. Capital plus liabilities. You start with the share capital. Our share capital 400,000. Just write share capital. Share capital. $400,000. I have now my balancing figure, which is the life assurance fund. This amount, and carry it the way it is. We now look at the liabilities. I have these claims that were admitted, but they had not been paid. So it's a liability. At the year end, the year 80. Let me write them on this column. 80,034. Which other liabilities do we have? We had the intimated claims. They'll be liabilities because they're intimated. They haven't been paid. They were 80,000. They were claims intimated of 80,000. Any other current liability? Can adjust this. This will give us 88,034. And I have the annuities payable. These are accounts payable. Just pick them the way they are. Any other liability? I'm all alone in this class. I'm wondering why. Akod, uliniwacha kwa mataa. So let us balance this 20,33,400. So just balance. So there we are, guys. So this is what you are expected to do. I've said very importantly, when the examiner asks you to prepare, irrespective, it is in order to start by setting out the trial balance because it will make your life easier. It's highly unlikely that you are going to miss out on some items when you have already balanced your trial balance. Any question? I want to go to the general insurance. Allow me to stop sharing this and go back to the notes. I think here they are.